That 2 by 3-inch piece of plastic in your wallet is one of the easiest ways to pay for anything you want. Swiping a credit card is very convenient as you get instant gratification for delayed payment. You don't have to worry about finances for weeks until you end up with a hefty bill that you scramble to pay off at the end of the credit cycle. While credit cards make money seem invisible, remember that you have to pay the bill with hard-earned cash. So if you aren't careful about handling that piece of plastic, you could end up in real trouble and under a huge mountain of debt. This is a rising problem in India as credit card outstanding amounts cross the rupees 2 lakh crore mark for the first time in this country in April this year. This is a jump of over 30% compared to the same period last year and double the pace of growth of overall bank loans. While experts opine that part of this is because of increased consumer spending and inflation, some of it is also due to rollovers. If you're one of those people who don't pay the complete outstanding amount on your credit card bill and are more prone to rolling over the amount, you're slowly digging yourself into a pit of debt. If you're already on the way to these perilous situations, here are some tips to help you get out of this vicious cycle. The first step is to rebalance your budget and cut down on any unnecessary expenses. The next is to stop any investments for a while. It will be better to direct this money into repaying the outstanding amount, as credit card interest rates are among the highest for any loan, ranging from 30 to 45% a year. If the situation is dire, redeeming an investment to repay the debt may also help. Don't break long-term investments if you see that in the foreseeable future, you may have a source of income or some money coming in somewhere that could help you pay the debt. But if there is no recourse, using your investments will be more beneficial as the debt burden can grow faster than the return on your investment. You could also consider taking a cheaper personal loan or an overdraft facility to pay the debt. But evaluate if you will be able to service the EMIs for the next few months or even a couple of years. To avoid getting into this situation again, try to pay off your bill every week instead of at the end of the month, especially if you find it difficult to repay a huge amount at one go at the end of your credit cycle. So set up automatic payments every week. This will also periodically reduce the amount in your bank account, making you more conscious of how much you can still afford to spend. Also, stick to your spending limits. To keep a check on credit card usage, fix a spending limit of say 10 to 20% of your income via credit card. Use different cards for different purposes and fix low limits for each of them. If you want to spend more, you will have to take physical measures to increase the limit. Most people hesitate to do so because it gives them the time to pause their impulse purchases and think twice about crossing their budget. An important point to remember is that you must always pay on time, even if you pay only the minimum amount due. While the Reserve Bank of India mandates that a late fee be charged only 3 days after the due date, you will have to pay a late fee and high interest charges if you miss the deadline. The late fee is not just a standard one. It is dependent on the outstanding amount. So if your outstanding amount is between 0 to rupees 500, you'll probably not be charged any late fee. But if it's between 500 and 1000 rupees, you will have to pay about say rupees 400. If the outstanding amount is between 1000 and 10,000 rupees, you might have to pay a late fee of rupees 750 and so on. Also, if payment is not made by the due date, interest is levied on a daily basis with a GST of 18% charged additionally on the interest, which can add up to a hefty amount. Most people assume that paying the minimum amount due will help avoid the high interest rates, but this isn't true, as the card issuer will charge 2 to 4% not only on the outstanding amount but also on new purchases. The minimum amount due includes all applicable taxes, the EMI on EMI-based products, and 5% of the total outstanding amount. Any unpaid dues from previous statements will also be added to the current minimum amount due to arrive at the total amount. But scraping by paying only the minimum amount due will continue the debt cycle. For instance, if you make a transaction of rupees 5,000, but pay only the minimum amount due on it every month, say about rupees 200. it will take you up to 44 months to clear the entire outstanding amount, even if you don't make any fresh transactions. Sounds crazy, isn't it? Maybe now you'll realize why it's important to clear the entire bill rather than keep rolling over the amount. Most importantly, ensure you have the funds to pay. Assign some money to pay off the bill at a fixed date and do not touch it. Because if your payment is dishonored due to lack of funds, you will be charged a payment dishonor fee of about 2% or a minimum of Rs 300 to Rs 500. This will be over and above any other charges. We hope you find our tips useful in being a smarter credit card user. Stay tuned to our channel for more savvy tips on spending and saving money.